How's it going, guys? Welcome back to the channel. This is the Mighty Indexers, and in today's video, we are looking at UTZ Brands Incorporated. So, its brands went public back on the market around November 30th to 2018, and then I think they officially started trading around this mark right here around December of 2019. Let's call it December 2019 to be very fair to this company. Now, when you take a look at this company that went public, mind you, via SPAC merger, for those who do not know, back then SPACs were all the rage. You know, this company went public via SPAC reverse merger. And looking at the 1 month chart, you'll notice that, it's up quite a bit. It's up around 83%, because they did get taken out by Germany's Intersnack Group Incorporated for a 2.9 billion take private transaction. So in other words, this company's been bought out. Um, this company was all the rage, also like on YouTube for some dividend channels because it was a paying a good dividend, and people were telling other people like, yeah, it's a good packaged food company to buy. Well, guys, it got taken out for 14 bucks, but just take a look at this, right? So it went public for around 10. So if you bought it in 2019, you made 46% on your money around 2019 to today. So you've held this company for quite a bit of time. Anybody who bought this company anywhere in between either lost money or broke even on their purchase, unless you bought it exactly 1 month ago. Then you did make 83% in 1 month. But who would have known that, right? So taking a look at just an overview. So going to their financial tab on Google Finance, looking at the annual revenue, it does pull a few years back. And as you can see, their revenue is pretty strong, but the cost of their revenue and their operating expenses, it took their revenue of 1.4 billion in 2024, cost of goods sold 1 billion, so the cost of their revenue was 1.04 billion. Their operating expense 310 million, and that left you with a net income of 15.9 million. That is a 1.13% profit margin. And then the last few years, you could see they had a negative net profit margin, and then a very slim 0.6 for 2025. So barely anything in terms of making money. Moving over here to Seeking Alpha, you can also see that, they have the forward PE ratio for this company. Going to the earnings tab, it also shows you like projected what they would have maybe estimate wise made in 2027. These are all estimates. So it shows like revenue growing very minuscule. But guys, the point of this video is who really made money on this company when you think about it, right? It wasn't the shareholders for the most part. It was the people who run the company who took it public via SPAC. Then when they went public, they went, and I believe this company actually went out and acquired a few other companies along the way, and now it's getting taken out by a German company. So that's why the point of this video exists, because if you had went and purchased around the same time frame, so right here, 2019, all the way to today, you're looking at a gain of 185% versus a very meager 46%. So that's the point of these videos, is to show people that, sometimes you don't have to do anything fancy. You can just buy a good quality index fund, hold it, and you'll outperform some of these companies that had a lot of huge promises of growth potential and dividend income raises, and now it's looking like if you had just stuck with this, yeah, you would have done much better. So for those of you who are in the market, I would say like 95 to 99% of your money should be in good quality index funds because the chances of you outperforming the index on a very long time frame is very slim. Anyways, folks, have a nice day. Just some, food for thought. Get it? Food for thought, packaged food company. And, if you guys have any questions, leave them down below.